Good afternoon. Let's get right down to business here. We're doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks ending higher today, kicking off the new week with a record-shattering performance, extending the rally last week following the Fed's half-point rate cut for the benchmark Fed funds rate, which impacts business and consumer loans. The Dow coming in for a closing gain of 61 points. Its third winning session in a row, settling at 42,125, and that is a record-high close. And for those keeping count, the Dow's 30th record-high close so far this year. The S&P 500 moving up 16 to settle at 5,719. That is a record high, and that index's 40th record close of the year. And the NASDAQ moved up 26 points, closing out at 17,974. The yield in the 10-year note, which impacts the fixed-rate mortgage rates, at 3.75%. Mortgage rates have been coming down lately. Somebody's been busy, including Jeff Lazarson, the president of MortgageGrader.com, as well as Orange County Register real estate columnist Jeff Lazarson will be giving us an update on what's happening in real estate and the mortgage business live later this hour. There will be a lot of interest rate cuts over the next year if economic conditions continue as they are, according to the Chicago Fed president, Austin Goolsbee, who spoke today. He said whether the next move is a quarter point or a half-point cut is not as important as the long arc, in his words, of policy. Goolsbee told a conference today at the National Association of State Treasurers. Investors have found another way to play the AI game besides semiconductor stocks, namely NVIDIA. NVIDIA has been in the spotlight, of course, but now Vistra shares overtaking NVIDIA this past week to become the top performer in the S&P 500. That's pretty impressive. We'll take a closer look at that electricity company. That's hardly a household name that's been in the news lately. Oil futures ending lower today after Iran's president told reporters Iran was prepared to take steps to ease tensions in the Middle East, which are at a boiling point right now, if Israel takes the same actions. The price of crude ending lower by 63 cents to finish at $70.37 a barrel in New York. Brent crude in London, the global benchmark, pulling back 59 cents to settle at $73.90 a barrel. The Associated Press reports Israeli strikes on Lebanon today killed nearly 500 people. Lebanese authorities say the Israeli military warned residents in southern and eastern Lebanon to evacuate ahead of its widening air campaign against the terror group Hezbollah. Thousands of Lebanese fled the south, and the main highway out of the southern port of Sidon was jammed with cars heading toward Beirut in the largest exodus seen since 2006. Boeing in the spotlight as well, making its best and final offer to striking union machinists. That includes bigger raises and large bonuses than a proposed contract that was overwhelmingly rejected. Looks like Boeing stock coming off a near a 2-year low today. Tesla moving higher today. In fact, one of the best gainers of the day, up nearly 5%. They expect to report third-quarter deliveries next week. Ford has a new patent for a device that could warn police when you're speeding. Meanwhile, Congress reported to be backing a measure to overturn Biden auto emission rules that Republicans say would force EV sales. We'll talk cars later this hour with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. But first, on the record-shattering day for the Dow and the S&P 500, joining us live now, top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, author of numerous books, including Investment Atlas 1 and 2, also Forbes magazine contributor. And notably, Ken Winans now has his own weekly show here on 790 KBC. That show is Winning with Winans, which you can hear at 6 p.m. Monday evenings. That's right, this evening at 6, right here on your favorite station, 790 KBC. Ken Winans, thank you very much for taking the call here this afternoon.
And, Frank, we're going to have a lot to talk about on Mottek On Money and tonight at 6 because, as you know, I am fresh off a trip to Washington, D.C., and I have a lot to tell everybody. But as far as what happened today, the most important thing I think everybody should take away is that we've completely eliminated the deficit that September typically gives the market. As of right now, the S&P 500 is actually up 1.2% on the month. And when we were looking just even a few weeks ago, it just looked like we were just going to have to just grin and bear it. That's very important because historically, when you have a positive September, usually October, November, December, and usually January also typically are in uptrends. So it means that we should be dusting off our playbooks. Anybody sitting in cash, even if they're in a high-yielding money market account, better start getting their Christmas list together because Christmas is going to come early this year.
On there live with Money Manager Ken Winans. And Ken, welcome back from Washington. Eager to hear more about that this evening in the 6 o'clock hour on Winning with Winans, and hope you had a successful trip there. We see gold, by the way, hitting new highs. That's certainly notable, as well as the major stock market averages, the Dow and the broadly based S&P 500. What about this impressive run that we've seen in gold the last couple of weeks?
You know, we've talked about gold all year, Frank, and it used to be that it would just be secondary to what's going on in crypto or certainly what's going on in AI, but yet it's kind of like the tortoise and the hare fable. Gold is now outperforming for the year the S&P 500. It is up 27% year to date, and the S&P 500 is up 20, and that also includes the NASDAQ. So I mean, the simple fact of the matter is that when you still have an inflation situation, like we can talk about the Fed loosening, but the Fed very clearly knows that inflation is not gone. And you're going to continue to see some very powerful rallies in gold and silver. I continue to maintain positions in both. I think there's merit to believe they can go holder. And you know, you and I talked about it before. I mean, I was on record for saying it on an earlier show. I think we will see gold hit 3,000 an ounce sometime between now and January. I might be actually underestimating the power of this rally.
On there live with Ken Winans from Analog Gold now to so-called digital gold. You also have your crypto credentials and follow crypto very closely. We see Bitcoin has seen quite a wild ride lately, back above 63,000 here at the moment. And Ethereum has bounced off a recent low right now at around 2,600. What about the cryptos and all this?
Well, it's interesting. You know, it's funny because everybody focuses on Bitcoin most of the time. They don't look at Ethereum. This bounce off the low for Ethereum is a big deal. And if you are somebody who is a technician, as I am, and I'm looking at these, I am treating these just like I would any other commodity or stock, that recovery on Ethereum, I think, is actually, you could consider it a trader's buy signal, and I think that there will be more buyers coming into it. I actually find this more interesting right now than Bitcoin. Bitcoin's been in what we would call a range-bound situation where it's in a well-defined channel. It has resistance, it has support, but no, what's happening in Ethereum might be a much better play. The situation is simple. I actually think what's happened in gold and silver has drained some of the money that used to be in crypto back into certainly physical commodities, but the Ethereum situation and also what's going on in stable coins, which I really do think next year will be the year of the stable coin almost across the board, depending on who's the next president and all that. But I'm getting asked more and more, certainly by your audience, Frank, and also on our audience for Winning with Winans, that there's just more interest in that right now. That's where people seem to want to diversify into, and they're waiting for more products to come out so they can do it.
On there live with Ken Winans, and NVIDIA taking a back seat to Vistra. That's a electricity power generating company based in Texas. Vistra now taking the spotlight with impressive gains in the S&P 500. NVIDIA, the Magnificent One, off its recent low as well. NVIDIA trading just above 116 and change. This Vistra company, which is getting new attention, up nearly $4 today at 111 and change. What are your thoughts on those two names here?
Well, interesting enough, there's a really good article in the Economist magazine, and the title of it's the title article for the magazine, The Breakthrough That AI Needs. But one of the things that I heard in Washington, and I heard a lot of it, is there's profound concern amongst elected officials and bureaucrats about the negative effects of AI. And I think that the R word was thrown around more than I could even imagine, and that is the word regulation and regulatory oversight. Those are typically not things that help stocks move forward. In fact, it usually generates volatility. So although AI is here, we're going to continue to see it transform our lives in a lot of different ways, but it's not going to happen overnight. They're still working the bugs out of a lot of it. But very clearly, we're going to have a lot of the things that were affecting crypto with regulation is spilling over into AI, and I think we'll be reading about that throughout much of the rest of this year.
All right, and you had flagged the utilities as being attractive already some weeks ago, and this Vistra, of course, is a utility. What are your thoughts on the utility names here now?
I'll tell you right now, you're stealing my thunder, my friend. I'm going to be talking about the utilities. I mean, the big move today, and I basically track the older utilities, many that have been around, some of them over 100 years. There is just powerful money moving into that, and it's not a group that most people would even think about, but you just hit the nail on the head. Whether you're talking about mining crypto or AI generation needs and energy, you need utilities to do all that. Even in today's world, we need it all. And I think that group alone, and when you throw in the fact that they're paying dividends of 4, 5, 6%, they're very enticing to even somebody who's in a hedge fund world to look at what's needed there. Again, we don't often talk about it, but if it's almost like if you think about having a combustion sports car like a Ferrari. Hey, it's a magnificent machine, but guess what? You need to have really good high-end fuel to run that car well. That's how I see AI. You have to have the fuel, and the fuel has to be, relatively cheap. It needs to be continuous. You can't have brownouts, and that is why the focus is now in that area.
On the Air Live with Ken Winans, and we're watching the latest news in the Middle East. It should be noted Hezbollah has launched about 9,000 rockets and drones into Israel since last October, including 250 today alone, according to the Associated Press. And we're seeing new Israeli strikes today in Lebanon. We're following all these developments very, very closely. A nervous time, certainly in the Middle East, as well as in the oil markets. And given that, Ken Winans, where would you any thoughts about what's happening there and the price of oil at this point?
Another takeaway I had from D.C. was a renewed focus on North American oil reserves, natural gas reserves, to not get into what snarled us in the 1970s in the Middle East. It's not to say we want to turn our back geopolitically. We certainly don't, but we don't want this to affect our own energy needs. It's certainly on the, what we would call the non-renewable side of things. So, again, another area that I'm going to talk about on my picks are more domestic-type plays that we should be looking at. It's very clear there's a shift, Frank, and I heard it loud and clear when I was back in D.C. It is not partisan. It's just practical. And the things we just mentioned here are a good example of it. But what's interesting to note is that, that even with what looks like all heck breaking loose in the Middle East, and certainly with some of our allies, and the fact that we are still having very heavy concentrations of military presence there, our energy prices are not swinging that much in dollar terms, and that's very important to note. Although oil had a big run today and oil stocks did very well today, it was not one of these wild gyrations that you would expect with all the horrible news coming out of the Middle East.
Now, you also have a real estate index, and you follow real estate very closely. We've seen the mortgage rates come down, prices still at or near record highs, although in some markets it looks like prices have come under pressure, namely Florida and Texas, I believe, as well, following tremendously eye-popping run-ups. What are your thoughts about what's happening on the rate front and the impact on mortgage rates and your outlook on real estate? Where are we going to continue to see the record run in prices, or finally things have we finally seen the top here?
Well, there's certainly my my real estate index, the Winans Real Estate Index, it looks at the national picture, but what you really want to look at right now is the regional picture. And in our case, we break it into 4 segments. It's interesting, we'll talk about tonight on Winning with Winans, but that is one of the topics is housing and the housing shortage. And it does go back to COVID. It goes, and then right after COVID, of course, we didn't build anything for a couple of years. We were under a lockdown. But then, of course, you had the inflation pickup, which affected all the construction material costs and labor costs. But now you take on top of that, and it's certainly what we had happen with mortgages. But now what you have happening is that things have moved up so far so fast that even the mortgage companies, they're just really being tough to get approval right now. And if you even try to get a pre-approval, it's very, very hard. And if you're trying to do any kind of a contingent sale, forget it. There's just too many what ifs in that scenario. So the market you talked about had moved up too far, too fast on the projection of migration, especially out of blue states. In the case of Florida, it was places like New York, and things like Texas. It had to do with Illinois and California, Oregon, and Washington. So now they realize that maybe that they had overestimated what was going to happen there, and you're just seeing a readjustment to it. But we're going to cover it more tonight in the show. But let me just say that the housing shortage situation is a real key political topic. Everybody in politics knows that certainly voters are looking at it. Voters are angry about it, and they're trying to address it. Unfortunately, both sides of the aisle have different suggestions on how to do that.
All right, Boeing back in the spotlight. It looks like the stock, which has been hammered recently, bounced off a near two-year low today. The company is replacing its CEO of Boeing Defense, Space, and Security following this fiasco with the Starliner, stranding the astronauts there. And then the company's also dealing with the machinist strike as well. They made their best and final offer to striking union machinists that includes bigger raises and larger bonuses than a proposed contract that was overwhelmingly rejected already. What about Boeing here?
Well, it's interesting. We're going to call it the Murphy's Law company because anything that could have gone wrong did go wrong when it came to Boeing. And, it's been years in the making. We can go back and look at some bad managerial decisions, engineers not being paid attention to, COVID-related logistic problems. But it's literally only one of four stocks in the Dow Industrial Average that is having a really awful 20 months. And so, there are people out there who they call themselves value investors, and they look for the most beaten up things. And certainly Boeing is going to be one of those names that catches their eye. But I think that what you're looking at here, and let's also say this very quick, Frank, that, look, Boeing is not going to disappear. It is a major defense contractor. Our military is dependent on them. A lot of our aircraft come from Boeing. Parts come from Boeing, all that. So with that being said, it's just going to take time for the new CEO of the company to reformat or do an alt-control delete and reset everything to get this company on right track. But it's not a surprise with, having our spacecraft stuck at the space station. I don't think anybody thought they were going to keep their job after that mess. Thank goodness the capsule came back okay, but it should have been resolved much quicker than that. And it should have been, we've been going to space for 50 years. They should have figured out how to do it in a much more expedient manner. For the
Mottek On Money audience now, Ken Winans, any specific places where you are putting money now and or taking it off the table?
Big three areas. Number one, retail. We're going into holiday season. You are looking at companies like Kroger, a grocery store chain, is outperforming the S&P 500. I'd look at companies like that. TJX, it is up 25% on the year. Take a good look at the retailers that really have figured out how to deal with an inflation situation and still get product to people. Number two, utilities. You talked about it earlier, Frank. The two that I'm on my list, one is Southwest Gas. It is about natural gas production. NG is going to be in our future for a very long time. I'd focus on those, particularly in the utility section. So SWX and NiSource NI. And then last but not least, oil and gas, domestic type companies. I would look at Imperial Oil, symbol IMO, and Williams, symbol WMB. Both of them have some attractive dividend yields as well. So you just want to go back and rebalance your portfolio, less in tech, more in these other areas.
Terrific, Ken. Well, thank you very much. I wish we had more time. And guess what? We do have more time coming up in the 6 o'clock hour. Looking forward to spending the whole hour with you on Winning with Winans. Ken, thank you very much for joining us live here this afternoon. That is top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. And, he's also on 790 KBC Monday evenings in the 6 o'clock hour right here with Winning with Winans. And I'll be on with him this evening at 6. Right now, out to the freeways we go on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. Record-shattering day for the stock market to kick off the new week with the Dow extending its winning streak. Up another 61 points to a record-high close again today at 42,125. The S&P 500 up 16 at 5,719, and the NASDAQ gained 26 at 17,974. The yield in the 10-year note, which impacts the fixed-rate mortgage rates out there, now 3.75%. We'll talk mortgage rates later this hour with Mortgage Grader President Jeff Lazarson, also Orange County Register real estate columnist. Price of oil finishing lower today by 63 cents, $70.37 a barrel in New York, and Brent crude in London, the international benchmark, down 59 cents, $73.90 a barrel as tensions continue to boil over in the Middle East. Gold moving higher to record highs, up more than $7 today at $2,653.40 an ounce. We see silver also along for the ride, pulling back slightly now, down 6 cents at $31.02 an ounce. NVIDIA, The Magnificent One up 26 cents at 116 and change. Vistra, this is a Texas-based power company, moving up nearly $4 today at 111.63. Tesla up nearly 5% today. First Solar up nearly 4%. We'll talk Tesla and the car business coming up shortly with Lauren Fix, our go-to car expert. And Boeing on the rebound today at more than $3 at 156 and change. Taking a look at the cryptos now, we see Bitcoin up about $50 at 63,354. Ethereum pulling back $3 at 2,659. And Doge at 11 cents. And now the latest news here in 790 KABC. Mottek On Money continues here in 790 KABC. Time to shift gears here now and talk about cars. Tesla expected to report third quarter deliveries next week, and that could prove another catalyst for its stock, which is revved up recently. According to Barclays, we see Tesla shares up nearly 5% today. We're also watching what's happening in Washington related to EVs. The House backing a measure to overturn Biden administration auto emission rules that Republicans say would force EV sales. All this at a time when GM's EV sales momentum appears to be finally building as the new vehicle lineup fills out. Let's bring in our go-to car expert now, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, good afternoon to you.
Good afternoon. Yes, this is actually interesting. The U.S. House of Representatives voted to overturn the Biden administration rule that sets for tougher emission standards. Now, it's important to note that on the surface, the title of all these articles all sound great. But what's interesting is on a joint resolution, 215 to 191, so 8 Democrats said, you know what, this electric vehicle mandate doesn't work, which I thought was excellent. But there were also a few Republicans that said, no, they want this electric vehicle mandate, which makes me question whether they're rhinos. But all of this would nullify, if passed in the Senate and signed by the president, which is highly unlikely, it would nullify the EPA's new restrictions on emissions for cars, light trucks, pickup trucks, and vans, and move it past the 2027 to 2032. So that would give us more time to decide, does this work? By then there'll be a different administration, there'll be different representatives, but the mandate is what we're trying to remove. And I'm a little concerned that if it does pass the Senate, it still would go to the president's desk and he won't sign it.
It looks like some Democrats voted to axe Biden's EV rule. We noted that as well.
Right. I can't even say half these people's names, but Henry, I think it's Cuellar, Vincent Gonzalez, Maria Glasson-Cap Perez of Texas, Yardira, I apologize if I get their names wrong, of Colorado, Don Davis of North Carolina, Jared Golden of Maine, Marcy Captor of Ohio, and Mary Statler, I think it said Peltola of Alaska, all sided with the Republicans. And one Republican representative, Brian Fitzgerald of Pennsylvania, of all places, voted against the measure, which, you have to think about the constituents no matter what state you're in and what they want. That's why how you get elected. And I always worry that they have other alternatives. Whoever's funding their next campaign is always an issue. But what's interesting is the pushback has been pretty interesting. As I've been saying all along, electric vehicles, everyone's saying, well, if you want them, you should have one. No one should take that away from you. However, every car manufacturer except for one has said, you know what, we're going to offer hybrids, we're going to offer gas, we're going to offer electric. General Motors is going to offer only gas or electric, no hybrid option. All the other brands have offered to do that. The only one that has said they're going to double down on electric is Stellantis, the one car company that's in huge financial trouble right now. They got rid of all their performance vehicles, both cars and trucks, and they want to do all electric. I just don't think it does not work for every single person, and I'm very concerned about the future for Stellantis. They've gone bankrupt under other names, Chrysler, Dodge, and so forth, FCA in the past. So let's hope that somebody over there wakes up to realize that you have to offer consumers a mix.
Very important point, and my hat goes off to you for hitting those congressional names cold, and great job on that one. And let me ask you this about GM. According to CNBC, GM's EV sales momentum finally building as their new vehicle lineup fills out. EV sales numbers provided by GM publicly reports sales quarterly shows a notable increase for GM through August. Remember, was it last year when they reportedly sold, what was it, 2 of those electric Hummers? I guess things have turned around a bit there at GM. Maybe you can give us an update.
Right, but they're not selling the numbers that you're thinking. What they had sold in the past were some pretty big numbers, and now the fact their numbers for General Motors, they're selling a lot of Corvettes, of course. They're selling a lot of pickup trucks and SUVs. But as far as electric vehicles, this is the end for the Chevy Bolt EV, which is an all-electric car. They're just going to run that out. And what no one's talking about is about 1,000 engineers have been let go from General Motors, and those are all part of the Ultium battery program, and that's concerning because Ultium is their big battery that they use for the Chevy Blazer EV, for the Hummer EV, and the other electric vehicles they offer. So if you're letting go engineers that are working on the battery program, I guess it all has to do with percentages. It's easy to say that sales are up, but in the reality, across the board on an annual basis, they got rid of a lot of their vehicles. They have no more cars other than the Corvette. And Ford did the same thing, and I'm wondering if they made a mistake when everyone's now saying, well, we should make more cars. You know, you should make these decisions well in advance, not it seems a lot of them are impulse. And the result is that sales are up, but based on what? And so I think maybe based on the year prior, so I guess you can manipulate the numbers any way you want. The truth is electric vehicle sales are far from where they need to be, and every dealer has them sitting on the lot.
Another excellent point. Turning to Ford now, they've had a struggle with their EV lineup, and the stock has been struggling too, around $10 a share recently. And I see that you've done a report here about Ford's new patent for a device that would warn police when you're speeding. Tell us about that.
Well, apparently the story has done so well that Ford has said, no, we're not going to use it for that. We're just going to use it for police cars. We'll see if that's true. It's easy to say that once there's a little bit of pressure coming their way. My concern is when you make technology that is supposed to help but does not, but basically tattles on you, it makes consumers very unhappy. And the results of that will be they'll look at other vehicles. And we really need to start thinking about all this data collection, where it's going, who's using it, and what they're using it for. And that's exactly what we're seeing in this case, is that the technology may have been designed for police cars, but it's going to be used against the average consumer. And we already know that this technology is in place as it is.
I was with some tourists from Paris here over the weekend, and they were asking me while we were driving around, where are the speed cameras here in Los Angeles? They have those in the EU where they give you a ticket if you go over a certain limit. We don't have those here locally, but people are very nervous about these kind of devices out there.
Right, that's already part of the infrastructure bill. Those monies have already been set aside. They're going to go to each separate municipality. So if in your area you're told that your local area is going to be putting up these cameras, you can push back against your local elected officials. You'll probably have more luck maybe than if you're going with some of the federal people that we've elected, and tell them we don't want these, because there's already been quite a few legal cases where they've taken these cameras down. So if you're taking your tax dollars to put cameras in to spy on you and collect your data, a lot of people aren't very happy about that. And so there's been a lot of pushback in smaller communities, and they've had good success in not having those cameras installed.
Another great point. Lauren, thank you very much for covering everything cars here in car-conscious Southern California. We look forward to seeing you at the auto show. Be here before you know it. Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, thanks again for joining us live here on Mottek On Money on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. Mortgage rates have been coming down lately. Home prices still stubbornly high with home affordability and availability. Of course, big issues here in Southern California. Joining us live now, the one and only Jeff Lazarson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Jeff, wonderful to have you with us this afternoon.
Thanks, Frank. Thanks for having me.
It's been a while since we've chatted behind live microphones since the mortgage rates started coming down. Give us an update on how the rates are looking.
They are fantastic. Last week, the Freddie Mac rate was at 6.09%. Locally, you can get a 30-year fixed at 5.5% at one point. So that's up to $766,550. The 15-year fixed is at 4.5% at one point. So 4.5 on a 15-year, we're coming down again. And then the high balance, that's $766,551 to $1,149,825. The 30 years at 5 7/8. at one point, and the 15-year high balance is at 5 1/8 at one point. Couple of things interesting to note: the Fannie Mae conforming loan limit is going up by some of the lender standards. Fannie and Freddie don't normally announce this till the end of November, and several lenders jumped the gun, and they announced a new conforming loan limit of $802,650, so about a 4.5% increase to the loan limits for next year. So it'll be cheaper for anybody that is up to 802,650. The other thing I was going to talk to you about was the market inventory levels, Frank, are really jumping. I mean, jumping a lot. In LA County, compared to last year, the inventory level of homes for sale is up 44%. In Orange County, it's up to 57%. And then Riverside and San Bernardino, it's 46 and 34% respectively. In San Diego, the inventory levels are up 74% from a year ago. So there is starting to be a lot more properties on the market, which means a slowdown is coming.
On the line with Jeff Lazarson, who's been doing this for decades. You've seen the boom and bust cycle play out here, Jeff. What do you see on the horizon here regarding where mortgage rates are going and where prices go from here?
I'm very surprised that rates are as low as they are, but so far it has not moved the needle too much. We're not seeing people jumping out and buying more than they have been. Right now, the houses that are priced well and are very clean, they're still selling right away. And then other stuff is just sitting if it's overpriced, or if it's an ugly house like lipstick on a pig. Those aren't moving too well. But I would say that prices will moderate a lot. They'll still go up, the median price, but not that much anymore. And rates, I think, are going to continue to come down. I mean, if anybody bought or did a loan in 23 or 24, they probably have a rate of 6, 7, 8%. They should be refinancing, because it's just a huge savings over what they got. I mean, if you can get back into the fives, that's just a huge home run.
All right, we did see the Fed lower the benchmark short-term interest rate, the Fed funds rate, by a half percentage point. That's one that impacts the HELOCs, right? The adjustable rate loans as well. Tell us about how those are looking now, and is that something people should consider?
Yeah, so the Fed funds rate, the prime rate goes down a half a point when the Fed funds rate goes down a half a point. So prime is now at 8%, and it was at 8.5%. And I would say that it's going to be dropping down over the next year, probably down to 6%, I would guess. So if you have consumer debt and you don't want to touch your first mortgage, for example, if you have a 2, 3, 4% first mortgage, you can always get a home equity line of credit it's going to be prime or prime plus something. The other thing that's out there is these things called a HELOC loan, or a fixed rate second. And the HELOC loans, they actually have a better rate than the home equity lines of credit. They're fixed for 20 years at, I don't know, maybe 7.5%, 8%. So those are something else. So if you have consumer debt and you're paying 20, 25% interest rate on your credit cards, this is really something to think about that could save you a lot of dough.
Very interesting. Any other new products or any other news that you could break for us here on the mortgage scene?
Well, the fog the mirror loan is getting interesting again. People that no job, no income. I think there's some people out there that are struggling and they need a loan somehow, and this is one answer for them, that they're not able to qualify any other way, so that those loans are back out there again for struggling borrowers. You still have to have good credit, and you still have to have a lot of equity in your house, but as long as you have those two things, you can get a loan anywhere.
All right, Jeff. We appreciate it. It's been too long since we got your update, so appreciate that very, very much. Jeff Lazarson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Well, looks like we'll be getting the new CoreLogic S&P Case-Shiller report tomorrow. Are we expecting any surprises there? And you track, of course, the prices here very closely here in the Los Angeles area and in Orange County. You expect any canaries in the coal mine tomorrow, or you think prices will be holding up pretty well?
I think they're going to hold up pretty well. There'll be a modest increase. The expected market time for homes for sale, besides inventory going up, the market time is a lot longer. That means from when it was listed to when it goes into escrow. So like in LA County, it went from 72 days to 100 days this year. In Orange County, it went from 48 days last year, a year ago, to 78 days. So those are a couple key indicators that I don't think that CoreLogic case shelter is going to be up too much. I think it'll be a little bit flat.
All right, Jeff, again, thank you very much for the update, and we'll continue to follow your articles in the Orange County Register and the real estate column. That is Jeff Lazarson, the president of MortgageGrader.com and OC Register columnist. Jeff, thanks again for the update.
Thanks, Frank.
And coming up, we'll be listening for the 790 KBC News Blitz with Randy Wang. By the way, I'll be out there with Randy Wang this Friday. We're doing a special remote broadcast at the Universal Hilton Hotel. It's the Over the Edge event in conjunction with the Union Rescue Mission's Just Help One campaign that's been announced this month. And the big fundraiser, Over the Edge, is happening this Friday. You can get more information about that at justhelpone.org. You can support Randy as well as yours truly's effort to raise as much money as possible for the Union Rescue Mission as we rappel off the top of the Universal Hilton 25-story hotel. We'll be going down the side to raise as much money as possible in support of the Just Help One campaign, Union Rescue Mission. Stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back tomorrow at 4 with more at 4 right here on Mottek On Money on 790 KBC.
Former Navy SEAL Mike Ridlin keeps it real on the Mic Drop podcast. Navy SEAL Mark Green.
What do you think the most critical leadership quality is for a SEAL officer?
Consistency. Even if you're having a bad day, the guys have to know what they're going to expect from you. Once the people that you lead stop coming to you with their problems, then you failed as a leader. To the last day, the guys were coming to me with their problems, which I thought was a victory.
Mic Drop. Raw, unfiltered, intellectually sound. Wherever you listen.